Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 27th of February. I'm Daniel Lam, your host for the podcast. In my television interviews over the last 36 hours, all of the anchors asked me about my thoughts on the rotation of funds from US equities into Chinese ones. Yes, some of such has been happening. I've been pointing out that even after the sharp rally that we saw recently, the Hang Seng Index is still trading at 46% discount versus global equities. That's more than one standard deviation cheaper than the 10-year average. Well, DeepSeek is not so much about whether this is a superior product than the existing ones. It is a wake-up moment for global investors that there is something called, quote-unquote, Chinese technology. Perhaps this is not at the higher-end technology that the US has been delivering, but it does put China on the map of the technological race and opens a, quote-unquote, non-zero probability that Chinese technology can catch up, both in terms of the actual technology and also in terms of share prices. The other factor, of course, is the recent shakiness in US data. Now, the February Conference Board Consumer Confidence Index missed estimates for the third month in a row. So as we analysts know, 3 makes a trend. So therefore, the US 10-year Treasury yield dropped below the key 4.3% level. Consumers' assessment of both the current situation and their expectations worsened. The labor differential, which is the difference between those saying jobs are plentiful versus those saying that they're hard to get, fell for the second month and remains near cycle lows. That signals further labor market weakness. US consumer sentiment has softened as post-election optimism gives its place to policy uncertainties. While consumption was the main source of the fourth quarter growth, consumer sentiment measures weakened since, and retail sales dropped in January. So the softening labor differential also points to lower income growth ahead. Year-ahead inflation expectations have also been ticking up. So these signals of hiccups in the US growth versus inflation mix, combined with the realization from DeepSeek, is likely to encourage some investors to continue looking for the relatively cheap Hang Seng Technology Index, which is our opportunistic buy idea. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.